Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/MishTalk. Happy New Year, Mish, and happy recovery from that nasty flu.
Yeah, thanks, and happy New Year to you and all of our U.S. and Canadian listeners. Really nasty strain of flu going around, and they said this flu shot didn't even help this one, even though that it had this virus in there. It just didn't work. So I'm not convinced flu shots work at all. Anyway, I was sitting there thinking, well, maybe I should get one next year, but then I find out that even though they had this strain in there, it didn't do a damn thing. So really nasty. I was out for about 10 days.
Mish, we keep hearing from Canadian government sources that the NAFTA talks are going poorly and the Canadian government is ready for Trump to rip it up.
That's what we're hearing here, too. The question is this another Trump ploy? Does he really mean this? No one ever knows anything about what Trump does or says. He issued some tweets today and then retracted them on this spying bill, which is really nauseating. 65 Democrats signed this damn thing, allowing the government to spy on U.S. citizens for another 60 years. Rand Paul said he's going to filibuster it. We'll see. If he does, the bill will die.
How do you feel about the government being so willing to spy on its citizens?
You know, Jim, I've talked about this before. I can't stand it. We've got a Constitution. We've got a Bill of Rights. They're there for a reason. They're not there because we think, well, we'll do them when we like them. They're there because that's what we're supposed to do. And just the whole trend on everything is sickening. We have all these undeclared wars. We have bombing of innocent civilians. We're messed around in Syria. We blew up Libya and essentially handed the country over to ISIS and a group of terrorists for meddling. We're still in Afghanistan after all these years. So, maybe we ought to reassess, Jim, but we won't. Even the Democrats here won't stand up. It's really nauseating state of affairs. Back to the economy and NAFTA. I think NAFTA's been good for the United States. I think it's been good for Canada. I think it's been good for Mexico. Is it an ideal bill? No, absolutely not. The ideal bill to me fits about a napkin, effective immediately, all tariffs on all goods and services, and all subsidies are ended effectively today. That's what I would do, but clearly I'm not the one in the administration here making the calls.
Well, right now we have a de facto trade war between Canada and the U.S. The U.S. just putting a 10% tariff on Canadian newsprint. They've put tariffs on Canadian softwood lumber, which is making the recovery from all the hurricanes so much more expensive for the U.S.
Yeah, absolutely crazy. It's crazy. So here it is. Canada wants to supply us lumber so we can build houses more cheaply, and the Trump administration, the lumber lobby, whatever, says, no, it's bad for it's bad for lumber jobs. Well, maybe it's bad for lumber jobs. Maybe it's good for housing. Maybe it's good for the consumer. Maybe it's good for remodeling. All of these kinds of things. And how many jobs are we going to save out of this? A handful, maybe. any. Actually, we're not going to save any jobs realistically. Whatever jobs we save in the lumber industry will be more than lost in housing and other places.
We'll have more with Mike Shedlock right after this.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Welcome back. We're speaking with Mike Shedlock. Mish, I've heard that oil prices are doing really well right now because the Aramco, who wants to sell off 5% in their initial public offering, is trying to manipulate prices higher for that very reason.
I think there's a number of things here driving oil prices higher. One of them is the feud between Trump and Iran. That's nonsensical, if you ask me. Iran is certainly more of a friend than Saudi Arabia ever was. Certainly the people of Iran. So again, this is just another one of these things that's just doing us no good. But this seems to be the path we're marching down. Again, we don't know what Trump's finally going to do when this comes. And then another aspect of, energy needs and some things went up as a result of the hurricanes. Manufacturing ticked up a bit, had to replenish chemicals and cars and everything else that was destroyed. So there's a lot of things going on here at once, and people are mistaking this for a strengthening U.S. economy. It seems like oil has a tendency to spike right before every recession. It did it in 2008. Oil spiked to all the way up to 148 or thereabouts. And this spike is by no means anywhere close to that. But the year-over-year increases for the last couple of years has been pretty good, and it's been the driver for the CPI and the PPI, which actually barely rose today. In fact, it was negative today. So there's these signs that things are heating up, but if you look closely, it's the tail end of a boom with a confluence of things happening, all at once. If you look at the jobs picture, year over year, declining for the last 3 years, peaked in 2015, I believe.
And also unemployment up higher than expected.
Well, you mean unemployment down? Unemployment's, been hovering 4.1 or whatever. It's a grossly distorted number. And if you look at the actual percentage of people in their prime working age years that are working, it's way lower than it was in 2007 and 2000. And I'm talking about age group 25 to 54. These are people that ought to be working, and there's not. And depending on which high you want to point back to, we should have somewhere between another 1 million and 3 million people in that age group working that aren't. They're called unemployed because they're on disability or school or whatever. They've dropped out of the labor force. But the only measure by which the U.S. jobs economy is doing fine is the unemployment rate. Wages have stagnated, and this is despite minimum wage laws going up last year in a number of places. 18 states put them in effective January of this year, 2018. So there's going to be another little bit of spike here in wages, but it's going to be at the expense of jobs.
And we've also seen in Ontario where they just hiked the minimum wage to $14 an hour. Tim Hortons has told their employees, sure, we'll pay you more, but you're not going to get paid breaks and we're going to take away your benefits.
Yeah, exactly. Expect the same kind of thing here in the U.S. The CEO of Jack in the Box came out and was talking about, and this stuff is going to happen, replacing cashiers with kiosks and stuff. This is going to happen, and he said the reason why, he said they looked at this technology before, the reason why they didn't do it is it costs a lot to go in and put in this equipment, and you got to get customers accustomed to it, but at some point it makes sense to just get rid of people making $15 an hour or whatever and replace them with machines whenever you can, and he said that time is now. Wendy's had an announcement. This stuff is starting. It's going to pick up big time. All these people say, that these minimum wage hikes don't cost jobs, but they do. They've got all of these studies. They had a study in Seattle, by the way, that actually proved that it's costing hours working, and people don't like to believe these studies.
And I know most people would be preferred to be served by a person than a robot, but in Japan, that trend's been around for the longest time. The Japanese started robots because they've had a labor shortage since the 60s.
Mm-hmm. And then it's just getting really onerous here. I was in a cab a couple weeks ago, and it says, leave a tip. There's a box for it. And now all of a sudden it's starting at 18% and 20 and 25. Those were the three choices given. 18, 20, and 25. For doing what? I remember when it used to be 10% and then now 15%. And now they're saying 18 or 20 is the minimum. So, people like to be served by real people, but at some point, and especially in a fast food, place, do these people really deserve that? Actually, the people most deserving of these tips are the short order cooks, the people who work at Denny's or whatever. They have these value meals where you can go in there and have a meal for $8 or $5 at Denny's or something and get a really nice breakfast for that price. And you know what? You leave them 20%, you're leaving them $1. So I think the way to do these things, what I do is tip by the amount of time that I was there, and how nice the server was, how friendly the server, how well the server did their job, not on the basis of whether or not you're ordering this $100 steak. Actually, I'm a good tipper, but I resent some of these practices now that we're starting to see where the minimum expected tip just keeps rising and rising and rising.
Well, Vancouver has a shortage of short order cooks. Restaurants are reducing their hours or closing because they can't find people to work in the kitchen anymore.
Mm-hmm. Well, who wants to work in the kitchen where they don't get tipped? When they can go out on the floor and do something. I appreciate a good server, I really do, and I tip them well. But the attitudes of some of them that we see now is more than just a little bit galling. Anyway, back to the state of affairs here in jobs. I don't know. I've thought we've been pre-recession here for a few years in a row. Everyone's almost given up on the idea. They're now expecting the economy to accelerate. I'm not expecting to accelerate. We've been floating around this, 2% plus or minus growth here in the U.S. We've got so much debt, and the debt burden on this is so high, and the Fed is hiking here. We're not going to get any growth, Jim, out of these tax cuts. It's just not going to happen. They're going to use it for the same things that they've done before: share buybacks and executive bonuses.
We'll have more with Mish Shedlock right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Mike Shedlock. Mish, before we go, any thoughts about high tech, anything that you find really encouraging out there?
We keep seeing more and more advances on the self-driving car front. This is 2018. My predicted timeline was like 2022 for cars. I think it's going to happen before that, 2021, maybe even before that for trucks. These advances are still being made. It's going to be a big productivity boon that's coming, and it's going to cost some of these people their jobs. So we'll see. Again, there's talk here, Jim, of the Fed getting in 3 hikes this year. I didn't think they'd get them in last year. They did. I was wrong. I'll take my same stand again. They're not going to get them in this year, or if they do, they're going to regret the last 1 or 2.
Mish, thank you so much for taking your time out to speak with us.
Pleasure to be on the show, Jim. We'll catch you next time.
My guest has been Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/MishTalk. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. You're going to find us on YouTube on Talk Digital Network. Questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.